Hello, everyone, and welcome to the weekend update here for August 11th. So it was a crazy week last week, starting off Monday with that huge spike in volatility and the big market drop. We're going to get into all that in just a couple minutes. In the alert group, the community, I just want to quickly share some of the trades. And I took some stabs at some trades here at different times during the week. And quite frankly, they didn't pan out great, but the week still ended up closing out at a nice $1,500 profit. But I had the SPY double diagonal that the market ripped up and kind of blew right through me there, and that generated about a $600 loss. Then had this particular trade. This was a SPY, a vertical, and very small loss, $200, because there was a stop in there. Now keep in mind, I'm trading these in the size that I trade them in, and they're larger sizes in most cases. So these could have been traded in much, much smaller sizes than what I did personally. Then I took a shot at an Avgo trade, bought a long call, and the market sold off. I took my small stop on that. Tesla, similar story, did a long call, market sold off. Tesla moved actually pretty fast to the downside. And so that one, I was actually out for the morning, and I was not here to take my stop when it hit, so that was larger than what I had anticipated. But I know I don't like to set up my screen, and I'm okay with that. And then this one was a nice profit. This was a butterfly trade that ended up at about a $3,200 profit when it closed. I did do a very detailed, for those of you in the community, I did a very detailed video here talking about the uniqueness of this specific butterfly trade and how that spike in volatility actually improved the performance on this trade. Now, that does not always happen, but it can happen. And I share with you in this about 10-minute video kind of why and how to know to look for that. So that's kind of one of the keys there, is understanding, when that happens, and how do you know when that happens? I was very busy on a bunch of other trades, long-term buy and hold positions, etc. that morning. But I had a specific order out there that told me, something favorable is going on in this trade. I need to pay attention to it. And it gave me an opportunity to adjust and thin that trade. And I show those adjustments again in this video. And then the ultimate exit at a decent profit, 30-some% profit in that trade. So these positions are all going to be moved out of the open index alert service circle down into the closed trade archives. There's now hundreds of trades down here in the closed trade archives that people that are members of the community can go down and they can walk back through them, literally play through them, play by play as I opened them, adjusted them, closed them. Each step of the way, there's a video explaining why I'm doing what I'm doing, how I'm doing what I'm doing, etc. So that should be very helpful to people that are looking to learn, not only from my successes, but also from my mistakes, because I do explain when mistakes are made, what I could have or should have done differently. Regardless of my personal outcome on a trade, my main goal is that I want to learn from it and I want others to learn from it. So that's kind of my focus here on everything that I try to do, is to try to bring a level of clarity, if you will, to the what ifs that can happen in trading. And of course, there's still a number of open positions. So let's take a look at those open positions. So I have this particular butterfly that's open. This is going to expire this next Friday. So this is going to start to decay fairly rapidly here. If our market does not move hugely to the upside or downside, if it chops here in a 70 to 100 point range, this trade should be able to come off midweek this week for a decent profit. We have long calls in Coke. So this was a directional trade. Now Coke started climbing up a little bit late in the day on Friday. If Coke stalls again, if Coke doesn't break to a new high, I'll probably just pull the plug on this, take a small profit. You'll notice I've already thinned this trade out. Right now there is no risk of loss in this trade. Now, I can certainly give back some of my current profit. I'm up $247. If I do nothing in this trade and Coke sells back off, I'm going to be out at $100 and some in profit. If Coke were to move up a fair amount more, I do have an order out there to sell this long call if Coke were to move up and get me out maybe at about $3.50 in profit, if that up move were to happen, and I'm not convinced it's going to happen at this point. Then I have this trade, butterfly trade, broken wing butterfly. It's moving along nicely. This was open just 3 days ago when volatility was higher. And again, I have a deep dive class on butterflies, and that deep dive class, I'll put a link down below. That deep dive class talks all about the nuances of butterflies. When is the best time to open them? When do you get the best reward to risk ratio? And I'll give you a hint, that can be in more volatile times, but you need to kind of configure your trade for what you think the market might do from there. And I get into all that technical analysis and helping to decide, what configuration of butterfly should be put on in what market environment. So anyhow, this one was just put on 3 days ago, already up about 10%. One butterfly, I believe, has already even been thinned out of this, locking in just a little bit of profit. Now, I'm going to skip this one for just a second, come down here to our wheel trade. So this is in Fortinet. I just did the third roll of my puts in this wheel trade, just completed that. So this trade is up about 8%, again, up about $860 in this trade, and I haven't yet owned a share of stock. The whole purpose behind this particular wheel trade is to teach people the wheel process, the process of selling puts with the intent of getting assigned the stock at some point, but making money while I'm waiting. So many people, when they want to get into a position, for example, in Fortinet, they go out and they buy the stock at $69 a share, and they just, buy 100 shares of it. I take a slightly different approach in most cases. I will go out and I will sell a put, maybe at 68 or 67, and I will sit and wait, and I'll sell that put for a couple $100, and I'll just sit there, wait my 30 days, and if this does not fall back to where I get assigned, okay, I picked up a couple $100. I've done that now 3 times. I've picked up almost $900. So when I do eventually get assigned shares of Fortinet, my cost basis is going to be significantly lower because of each time of selling these puts, taking in premium along the way. If you're not sure you understand exactly what I'm talking about here, again, part of the community here is I go into a deep dive on that, and there's a whole video when I started this process that I show the actual diagram of the wheel loop and how that whole thing works so that all the traders in the community understand exactly what's going on there. Now, this particular ugly trade on RUT. So as you may know, RUT went through 2 massive moves. Let me just pull RUT up here first so that we can see what transpired. RUT. Okay, let's try this again. So we can see that this particular move in RUT from roughly 2,000 all the way up to almost 2280, pushing 2300, 2000 to 2300. That is a massive move. This was one of the top 5 largest moves ever in RUT. This was a 4 standard deviation move. Now, I had on a delta neutral butterfly strategy that I had opened up on one of these 2 days just before this massive move. So, because that's a delta neutral strategy, it's designed to take some upside movement, some reasonable upside movement. I had that set up to take a move, up to 2100 without really being negatively impacted. I had it set up that it could take a move down to around this 1930, 1940 range without really having much of a negative impact. But when you get this move and it just powers day after day after day after day, not giving you really a chance to adjust, not acting in a normal way, where when you have, a big 1 or 2 updates, you get a pullback. You get a big 1 or 2 updates, pullback. Occasionally, you might get 3 updays and then a big pullback. So that's normal market, is this up and down. And so my anticipation here after this gap up and run was that there would be a pullback. So I was waiting for an adjustment. Then the next day, higher, no pullback, higher, no pullback, higher, no pullback. So consequently, this particular trade is one of the ugliest trades I have personally been in quite some time, because this thing ran up considerably. After all of that run up, we finally get a pullback. I adjust this trade to deal with a new range going between 2,300 and about 2,150. That's kind of the range I'm expecting that trade to act in. And then what's it do? It collapses right back down here to 2,000. So had I never touched this trade in this process, it would really be looking good right now. But I ended up chasing my tail because I had to adjust that for what I considered to be probably a sustained higher level, higher channel in this underlying, and then it fell back out of that channel. So that has really put the hurts to this particular trade. Now, I also did this trade personally in a much larger size. This is not a size that I do in the community, and I told everyone up front, listen, I am doing this in a larger size for a specific reason, and it had to do with ratios, because my goal was to have a butterfly, maybe 10, 20 butterflies, and then I was going to buy a long call against that. By the way, had I bought that long call the same day I put on this butterfly, this trade would be golden. I didn't. And again, that's on me. I did a whole video that I've shared with all my students about the mistakes that I've personally made in this trade. I am still trying to battle it to get this back, probably not too much in profitability, but to reduce the loss in the trade. Now, if RUT in fact starts acting or continues its erratic action, at some point here, I'm going to pull the plug on it. And I don't often pull the plug because of a stop, because very seldom do you get a move that's large enough that it would create what I would consider to be a reason to stop out. I can adjust for pretty much most things. In this particular case, though, I will stop out if something is not acting in a way that I expect it to act. If it's acting in a way that's so erratic that I really don't know what it's going to do next with any level of assurity, at that point, I don't belong trading that. Most traders have what they call a do not trade list. Stocks that they've gotten in, they've traded before, the stocks didn't act the way they expected them to act, and they may have tried it 1, 2, 3, 4 times, and then they'll just put them on do not trade lists. For me personally, that's biotechs. I used to try to day trade some biotechs, and because of the way they can move, big, huge, dramatic moves one direction or another based on news, I just decided they're not for me. So RUT may be approaching that status because of how erratic it's been recently. So these are the current open positions that we have in the community. Now, let's talk about the market itself. We've already kind of talked about RUT and how crazy this thing has been. Again, this is a massive, massive up move. I don't know what percent that would be, but that, I don't know, 10, 15% up in 4 or 5 days. And then 2 weeks later, it drops the same amount. That's just a nutty, nutty move for a major index. Then we look at SPX. And, of course, we know things like this can happen in SPX. And down moves, I understand down moves. Down moves are something that are pretty typical, pretty normal. Big up moves like this are not abnormal after a big drop. But in the case of RUT, it had just traded sideways. There was no drop. All of a sudden, it just took off. So again, that's the part that I consider to be a little erratic. So right now, looking at SPX, we can see SPX is right here at what I will call an inflection point. I painted this zone in here, and it just peeked its head out of the zone and then dropped back into it. This zone is kind of a battleground, if you will, or a DMZ, a demilitarized zone, for lack of a better term. Here, we don't really know when we're in this zone if we're going to break back to the downside or if we're going to break to the upside. Right now, we're making lower lows, lower low here, lower low here, lower low here, and we're also making lower highs. lower high here, lower high here, lower high here. That definitely signals a downtrend. But that could potentially be broken if we can get back up here into or above this 5,400. We get above this 5,400, we close above this 5,400 range. At that point, if we get a little bit of a pullback, I would expect a pullback maybe down here to the 5,300, maybe 5,330, and then maybe a bounce off that making a higher high. That would be the best case scenario for signaling a trend change back into bullish mode. And if we look at SPY here, I think I've drawn some parallel channels. So SPY, same as SPX, just 1/10 the size, ran up considerably here, fell out of the channel, then started a new channel back up, ran up considerably. And you'll note that the distance of the fall here, I think I measured this in last week's weekend update, this was 6.5% drop. Here we were 6.8% drop, as I recall. So very, very similar. I take that back. It was a 6.8% drop to here, which was last Friday. At the time I did last weekend's update, that was the drop. So I was at the time anticipating that this drop may have been over. Now, that Monday is all new, if you will. So that did break our trend here of a 6.8% drop and then a rally, 6.8% drop, rally. That doesn't mean that we're not going to rally out from here, but we are at definite inflection point right here on the SPY and the Qs. So very, very similar. This channel's been on here for a couple weeks now. And again, last Friday, I was expecting a potential bounce out of this channel, and then we got that bad news on Monday and this move. So now we're right back to the top of that channel. So this is a bit dicey territory. We're questionable. Right here, I would say we're 50-50 as to whether we're going up or down. Generally speaking, I have better odds than that. Now, last Friday, although I was wrong, I said I think we have about a 60-65% chance of bouncing higher from here. And that is why, by the way, you'll notice there was a number of failed trades that happened this last week. Well, that was this move right here. So on Friday, Thursday and Friday, my expectation of a move higher out of this zone put me in Avgo long, put me in SPY long. I forget what the other one was. There were 3 or 4 of them there where I basically bought calls expecting a bounce out of here. And then, of course, when this move happened on Monday, it was obviously not the right call, if you will, that I made. And that's why I had so many that closed at a loss this last week. So that is an overview or a quick look at the market. It's also important to note that if you come in and look at many individual stocks, very similar, new lows or almost new lows and rally back right here to this resistance area. So Microsoft right in a heavy resistance area. Apple rallied back right into this heavy resistance area. I think maybe Avgo was similar. Yeah, rallied right back into this resistance area. So there are a lot of heavy hitting major stocks that all have essentially the same pattern right now. I have not looked at Amazon yet, but okay, so Amazon had a bigger gap down, but very, very similar story here. It has rallied back right into what I might consider to be a resistance area. In fact, as I'm looking at this, if our market starts to sell off a little on Monday, I'm not sure that I wouldn't be doing some form of a bearish position on Amazon. I'm going to put that kind of in my mental watch list to take a look at on Monday. Because if this fails, if this does not go higher here than probably the 169, 170 range, I think Amazon could certainly be a candidate for going lower from here, at least in the short term. I mean, long term, I think all these companies are good, solid companies, but they may just simply be overbought at this point and due for more additional correction. So that is it for the weekend update, everyone. I know we were a little longer last week, a little longer this week, given the market conditions. Please like, subscribe. Let me know if you have any questions, if people are interested in the community where I share all my trades live, real time, as I make them. I'll put a link down below for that as well. Thanks so much, everyone. Take care.